All right, let's see. Bunch of lines on the screen. Good afternoon. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is 5:01 Eastern Standard Time on a Thursday, August 4th. I am not on camera because I'm at the office computer, but here we are, ready to rock and roll, ready to talk markets. Love to have you on board. Bottom right-hand corner of the screen, click on that black logo. Turn on notifications, subscribe to our channels, like our videos. We have a lot to get to, including something that I'm seeing that no one is really talking about much. Is crude oil in a bubble? Did the bubble just burst? All right, let's go over the indices first and kind of the basics. Dow Jones closed about 0.26%, 32,726. NASDAQ did gain 0.41%. S&P flat, 0.08%. Not a big day. Volatility index VIX down 2.32%, 2144. We'll go ahead and look at that. So again, S&P futures kind of didn't do much today. Tomorrow is the non-farm payroll day. That is the jobs report. Let's see what that number brings. Let's see the reaction. It's going to bring up the volatility index. Filled one gap, filled two gaps. Sound familiar? We talked about that, I believe, on Tuesday on Twitter and on the Discord channel. I did not voice that because my voice was messed up. But again, we just filled some gaps. Doesn't mean we're going to go lower. Doesn't mean we're going to go higher. We're just going to see where we are. Key level here is right around 2119. If we expand that to a 4-hour chart, again, simply discussed, we just have a nice trend line. If we break below that, then we can talk. But until then, all we're doing is retesting a nice trend line. That's the volatility index. Small caps did lose today, 0.21%, 189.35. Let's go to IWM. IWM looks like it is possibly double topping, so I may not want to be the first one in line to buy IWM. But if we go ahead and take a look at the daily, one gap, two gap, we filled. No other gaps to fill, so not much edge here unless we break above 190, 191. Going on to the dollar. The dollar is down 0.72%. You can see this trend line I drew from peak to peak, continuation, breaking down below. I expect the dollar to at least retest the daily 50-day MA, which is right around 105.12. Once we go there, we could definitely bounce again like we did just 2 days ago, or we can continue to go down and hit this next level of support of right around 103.74. But I do expect the dollar to continue to weaken. With that being said, stocks will benefit, obviously, or it should. Let's go to 10-year yields. Again, head and shoulders pattern on the daily. We know that. Again, if we expect to retest the neckline, then it would be right around 32.48. We're far away from that. We do have a slight gap to fill to the upside at 27.45. I expect that to fill in the coming days. And if it doesn't, then we can continue down to around 25.75. We saw that mortgage applications were up this week. Thank you to 10-year yields. The 30-year mortgage is now below 5%. So again, trending in the right direction. Let's go and take a look at government bonds. Government bonds is right at that resistance. We broke above that, right at the 100-day moving average on the daily, 119.31. Not tons of edge unless we expect rates to continue to go down, and then our next target is around 122.25. Let's go ahead and hit up, what's next? Let's do Bitcoin first. Bitcoin was down 4.25%, even with a stronger dollar, even with a good NASDAQ day. So again, not the best price action here. We do have a nice gap to fill to the upside to 23,926. Maybe we get that over the weekend, or we can start retesting support around 20,724. I still own Bitcoin. I still plan to own it. And as of right now, we still have one more gap to fill right around 28,639, plus another one here of around 35,174 with no other gaps to fill to the downside. So again, looks like Bitcoin is trending up, not at this very moment on the short term, but if we go ahead and expand it, looks like we are creating slight of a base. And again, we could continue down, sure, but again, there is a gap to fill up. So let's take a look at Ethereum. Ethereum kind of very similar to Bitcoin. You could see here, gap to fill, gap to fill. We filled this one. Now we're just kind of holding that 50-day MA on the 4-hour, and you can see here this gap to fill at 26.30. That would be my target if I was to sell or I wanted to sell immediately, was that gap to fill. It'll take some time, but it should get there. Let's take a look at gold. I had a question about gold today on Investment Club. And the question was really, should I buy gold? I do own gold coins and all that stuff, and one platinum coin, which I think is pretty cool. But what we did here was just retest that support of around 1683. Right now in the weekly, not a lot of edge. I mean, if you're trying to target maybe 1834, I could see it. That's a major moving averages. If we go to the daily, I mean, we're just coming back above previous support, and now we're probably going to test. Let me remove this open study here, right around 1842. So again, if you are trying to go long on gold, a weaker dollar does help. So again, that would actually wouldn't be a bad idea to probably go long. I wouldn't trade GLD. Just learn from my mistakes, guys. GLD sucks to trade sometimes. If you really want to trade gold, just stick with gold futures if you really want to make some money, because GLD is absolute trash when it comes to options, at least for me. So again, that's just my advice on there. All right, let's get into it with oil. And I wrote this down beforehand. So let's take a look at crude oil. And I put this tweet up there today regarding, is crude oil bubble burst? Well, here's crude oil. And I'm going to go ahead and compare it to something interesting. Let's go to ARKK, right? Kathy Wood. Let's go to the daily. And again, the daily doesn't really reflect one-to-one. But if we bring up a 3-year, let's take a look at that together. Again, we're just going to look at these two. And when it comes to bubbles, really, how do we define them is the question. Kind of tough. I mean, I think we've all seen The Big Short, right? The saying when Michael Burry was talking to his investor Lawrence, he said, "That's what makes it a bubble. No one can see a bubble," right? Well, again, I don't think this is a call that I should be, ooh, I'm so excited, I'm so smart. I really just want to let people know that data is data, numbers are numbers. Gasoline prices aren't political. I don't know why we do that. At least I haven't given credit to the president for lowering oil prices because he didn't do anything. So I'm not the kind of person to give credit for someone not doing anything special, in my opinion. That's just me. But again, the dollar helping. So let's go ahead and add another setup here. We'll add the dollar. So again, just walk with me here. So we had a low in 2020 with crude oil. It kind of hurts when everyone's locked in at home and no one can really do much, right? I mean, that's the beautiful thing about oil. When demand is nowhere near where it should be, prices are going lower. And if demand is very high and supply is the same or less, prices go up. It's not magic, it's just economics. So in 2020, everyone's home, no one's driving. I know I wasn't driving much, so gas prices are going to go down. That's not a president thing, that's just the reality thing. Let's take a look at ARKK. Really at the same time, with that stock market crash that we had, that big drop, we got to 33. And what changed in ARKK in 2020? Well, we lowered rates, we started printing a lot more money, and we gave a lot more stimulus out. So, you're not going to buy energy when everyone's home in 2020. And this was dead money for a little bit. Energy companies, oil. You're going to go chase higher yielding instruments, which is growth stocks. And they effectively tripled from 33 to 159. And of course, that burst. It came down, and now we're at 50. So, I mean, the recovery's not there, but pretty ugly to say the least. So this is not a one for one, but again, just walk with me here. Take a look at this. So again, we got to around 35 a barrel, and then once we got into 2021, inflation started rearing its ugly head here and there. No real instance of big time CPI spikes where everyone's afraid. That came in 2022, first half. So we went from around 6.5 to around 82. That's way more than triple. That's big. Now you're probably saying, well, Carlos, that bubble didn't burst. No, but we did fall from around 84 to around 65. Granted, the same president is in power. He didn't do anything, nothing special anyways. And then we continued to go higher and retested right around 85, the same level back in January. But what changed, Carlos? What changed in ARKK and crude? ARKK had benefits of a money printer, stimulus, people being at home, high innovation companies that were making money that they've never made before. Roku's and the names of the board. I'm not saying Roku will never make money. I'm not saying Roku can never reach all-time highs, but it did soar right away. I think we can all agree. So if we zoom in to crude oil, what happened here? So we went from that double top, possibly, to a break to around 90. So again, about $5. Not the end of the world, but right here's what we had the Russian invasion. That was your watermark, or let's say. So we went from around 89 to 130. That's a big jump. If we were doing the math at home, 89 to 130 is a jump of 46% on a commodity in a month. That's not sustainable. It just isn't by any stretch. Now we came back down a little bit to 91, and then we got one more bounce. Sound familiar? Got one more bounce, and then we continued to fall on ARKK. Now, I'm not saying the companies in ARKK are the same as energy companies, but manias are very similar. Bubbles happen this way, where you get a displacement. So I'm going to read you literally an explanation of what a bubble is. It starts with displacement, guys. The stage takes place when investors start to notice a new paradigm, whether it's printing money, stimulus, lower rates, or some kind of geopolitical issue, Russia and Ukraine. This can basically get anything to get their attention. If you think Russia is going to cut energy exports, you're buying energy companies and oil companies because less supply, yet demand is going to be the same. That means higher prices. I'm not putting all the blame on just Putin. I'm blaming the blame on the geopolitical issue as a displacement mechanism. Just like ARKK was displaced due to stimulus and everyone getting money staying at home, same exact thing. Human beings are very, very similar. We repeat ourselves constantly, and then we wonder why things happen. It's just human behavior. Next, we have a boom. Prices start to rise. They get even more momentum as more investors enter the market. Sound familiar? ARKK in 2020, crude oil in 2022. This sets up the stage for the boom. There's an overall sense of failing to jump in, causing even more people to start buying assets. Didn't Buffett buy some more Oxy? Now, again, who am I to tell one of the richest men alive, one of the most legendary investors, that he's wrong about anything? I am not that person to tell him that. I'm not going to be the person to say, yeah, I know what I'm talking about, Buffett. You don't. He obviously has his own path of doing things, his own way of investing, and good for him. But now we go to euphoria. That's where we are at 130. As asset prices skyrocket, it could be safe caution on the part of investors is thrown out the window. We saw how much people were buying into energy. It was easy money then, just like ARKK and all the meme stocks in 2020. And then you have some profit taking. This is where we are. We have now retraced the full gain of the Russian invasion, and now we're below it. Does this look bullish to you? No. Let's do some numbers, and I'll end that and answer some questions. Crude oil, this is peak to trough. From the top where we are, NASDAQ, 34% at its lowest point from peak to trough. That was just last month. Was that a simple correction? No, that was a bear market and everyone was freaking out. Wheat, down 42%, peak to trough. Again, is anyone talking about that? Of course not. Corn, down 26% from its peak. Is anyone saying that's a bear market or the world's over or food is too cheap? Of course not. How about the S&P? S&P was down 24% from its peak this year. 24%. That's a bear market. We were in a bear market. Since we like technicalities and we're traders, how about this? Gasoline. Gasoline is down 34% from its peak. By definition, a bear market. By definition, a bubble popped. Did you think ARKK was a bubble that popped? If you do, then you have to say that oil did too. So why am I telling you this? Because oil may be giving us an opportunity to short, guys. It is. The dollar's not going to save it. The dollar's down. And we could compare the dollar as well. The dollar, again, let's take a look at the 3-week. It's coming down too. But Carlos, if the dollar's going down, shouldn't commodity prices go higher since you only buy less, it's priced in dollars? That's really the tell for you guys. That's the tell. The tell is telling you that regardless of the dollar, it's a fundamental issue with crude itself. Again, it's not like Saudis and OPEC are extremely adding more supply to the world, and we're in peak driving season. but you can see demand is not the same that we were last year. In 2021, we had way more demand for gasoline than we do now. That's what I mean by it's all cycles, guys. So again, I closed my Chevron long today. I made about 10% with Investment Club. Why did I close it? Because the crude oil is telling me something. We might get to 74. Hell, we might get to 62 a barrel. And if that's the case, right now, guys, I just retweeted Oklahoma City has a gas station. It's $2.99 a gallon. Gas prices are going lower. That's not a political statement. That's just reality. Let's answer some questions. All right. What do you think about Amazon puts? That is from Mike. All right, Mike, let's take a look at what you're seeing. Take a look at the daily. We do have a gap to fill to the downside in the daily, so I can see what you're talking about. We do have the 200-day moving average, a big level for Amazon. We may reject this. So let's wait, Mike, and see if we can get to around 146 on Amazon and then start taking a look at possible puts. Because I don't think you want to play puts in this kind of setup on the hourly. So you may want to swing that one, man. Jason says, thanks for explaining everything specifically. It helps a lot. You're very welcome. Again, like I've always said, it's easy to just go by a chart and tell you what's happened. It's more important to tell you why things happen. And things are shifting. I do believe that oil markets were in and the bubble has popped. Was in a bubble and the bubble has popped. And just like anything else, like ARKK and Nicola, or whatever that is, how about Beyond Meat? Bubble? Oh, well, let's take a look at Beyond Meat. Yeah, 32. Where was it before? Oh, it was at 134. Yeah, how about 221? This happens, guys. How about Space offering more shares? Double top at 62, and then down it went to 8. Oil is no different. I'm not thinking it's going to go to 0, but you're going to get some people who are getting out. So again, something to think about. I know it was a big rant. Some people did leave the viewing ship here because I talk a lot. And my apologies, guys. I hope you watch this over and again on your own time so you can really see and deep dive what you're doing. So yes, William, will you be playing CVX and XOM puts? I will. I will. Let's see what we get. I'm watching XOM, XOP, CVX, MRO, and Oxy. I like Oxy a lot. So let's take a look at Oxy before I call it a session. My level is 56.12. That is the support that we have on the, well, it says weekly, but it's really on the daily. And then I could target, anything in between. I mean, I think I got a little bit of room all the way to 48, and then we can talk. If you really want to expand a little more, how about XOM? XOM has a gap to fill right around 84. And then there is another gap right here at 66, another one down here at 63, another one down here at 59, and one more for the road at 57. That is just the last 12 months. If we bring up the 3-week, we got one big one right here at 57.93. That's XOM. Got a lot of dry powder to go. What I want to short at this very instance on XOM, not exactly. Maybe if we get below 86, I'll take a look at it. But yes, energy puts are on my radar. I think it's going to be a great opportunity. I think we're going to get a rotation here into more growing assets, more risk on assets pretty soon as we've gotten. But I think energy is going to come down. And again, you shouldn't really cry for anyone who had energy stocks this year because they're up 21.5 year to date. The problem is that it was up 75% year to date at the top. You don't get that kind of displacement or that kind of movement held for very long. I'm not saying energy can't bounce. I'm not saying that. I'm saying that we have more to go. And then we'll see if we can pick up the pieces later and see if we can get energy stocks on the cheap. Unless you think oil is going to go to 200 and all these energy companies who had stellar earnings are going to repeat that next quarter. Very tough sledding ahead for energy. Have a great rest of your afternoon, guys. Thank you so much for taking the time out of your day to listen to whatever the hell I'm talking about. I mean, who am I to speak, right? I'm nothing special, but you're here, and that's what makes a difference. Thanks again for your support, as always. G.A.R Capital, FX.com is the website. Follow me on Twitter at G.A.R Capital. I'm always tweeting every day. Love it. And we'll see you soon. Cheers.